Hey everybody, hope everyone's doing well and had a good day. This is the Emini end of day review for Friday, August 9th, 2024. So it's Friday, start with the weekly chart. The market was in this tight bull channel and we had a trend line break. And at some point during this week, this bull reversal bar is this week's weekly bar. At some point during this bar, the bar was on its low. This was a bear bar closing on its low. So we had 4 consecutive bear bars. The problem with the bear breakout in this context is that we had a tight bull channel. So the odds were there's buyers below. We have the first trend line break, but the expectation after a trend line break is if you're going to get a major reversal, you need to see a trend line break and then a retest of the trend's extreme. So the downside's limited. We're not necessarily going to just convert straight into a bear trend. That's unlikely. Here, this was a big breakout from the high of 3 weeks ago all the way down to the low of this week. That's a big distance. We also broke far below the bull trend line. So you have bulls who bought up here, disappointed by this sell-off. They may be so disappointed that we do not come back and test the high close. There's a couple of different ways this could happen. We can get a higher high, major trend reversal, where we actually break above the prior high and then reverse down. We can get a double top, a perfect test of the high, or we can get a lower high. So in this context, the bulls might be so disappointed. Maybe they look to exit maybe at 50%. We may bounce a little higher. But like I said, this breakout was fairly strong and it's a 4-bar micro channel. The odds are there are sellers somewhere above and that the bears will probably get a second leg down. This looks like it's going to be a bull leg in a trading range. Big up, big down. The market looks like it's starting to go sideways. So if we do rally, there's probably sellers above. And if we do sell off, there's probably buyers below. And coming into the day, the big sell-off, 2 legs down, 1, 2, climactic, second leg, and then a lot of sideways price action, trading range bars, overlapping bars. Big outside bull bar yesterday. So what about buying above this bar for a swing up? Well, the momentum down is pretty strong. And this is a tight trading range. And the odds are breakouts will fail. And even if we do pull back further, there's probably sellers at the moving average. So after such a big bull trend bar, the expectation in this context is actually disappointment. So I figured the market would do something today to disappoint the bulls. And then, as we know, most bars are breakout bars, which means most days break out above the high or below the low of the prior day. So that's why I like to draw yesterday's high and yesterday's low. Here we are opening near the high. The odds are we'll test yesterday's high and maybe not get below yesterday's low. So coming into the day, we had a trading range here, 2 legs up and then a gap down, a doji on bar 1. When you look to the left, you know the market's in a trading range, and then you get a doji on bar 1. We already know that 80% of days have trading range opens, and in this context, the odds are at least 80%, if not more. Probably sellers above 1, buyers below, and again, probably going sideways on the open here. Gap down might be a strong enough implied bear breakout. It's a bear leg from the high of bar 79 to the low of bar 1. Traders who are long are disappointed. Bears who didn't sell are trapped out. So sellers above 1 for a second leg down. outside bar on 2, but outside bars within trading ranges are meaningless. They're just trading range bars within a trading range. So buying above bar 2, probably not ideal. You had a failed breakout below bar 1. We're attempting to break out above bar 1 now, but we're still within the trading range. Also, I said the gap down, that might be a bear leg. When you're in a trading range, the market typically gets deep pullbacks. Look at bar 75 yesterday. The market's in a trading range, big bull bar, but look at the pullback. Pulled back all the way down to the bar 74 high. So what we might be getting here is a bear breakout, a deep pullback, and then a second leg. Think about if you were long, say on the close of bar 81 yesterday, and then you have a gap down. Even if you pretend it's a continuous chart, it's just a bear bar, you're disappointed. So what are you going to do on a retest of this price? You're probably going to sell out of your longs. 3, we got a bear bar. It's a really good looking bear bar, but the context is bad. Now it's 2 legs down, low in a trading range. Strong enough bar, we may go a little bit lower, but traders are waiting to see what the follow through looks like. If the follow through looks like bar 3, in other words, if bar 4 is a duplicate of bar 3 and we fall all the way down here, more traders will be willing to sell. But if bar 4 disappoints the bears, then bulls and bears might begin to buy. 4, it's a bear reversal bar closing on its low. Decent follow through bar, but significantly smaller than bar 3. We're still not broken out of this trading range. So again, this might be leg 1, pullback, leg 2, and we're still not breaking out. So any bear who is short here is front running the breakout. More likely, after 2 legs down in an overall trading range, bears may start to look to take profits down here, and bulls may start to look to buy. We fell below 4 on 5 and then reversed up, bull bar closing on its high, 2 legs down, double bottom, good signal bar. Bulls will buy above bar 5, looking for a swing to the top of the range, maybe to test yesterday's high. Bears, they'll probably exit above a bar like bar 5. You could argue 3 and 4 are strong enough for a second leg down, and we may get one. But bar 5 is a strong signal bar, and the context is pretty good for the bulls. 6, we triggered the buy and then pulled back immediately, but bar 6 became a low 1 signal bar, and it's at the bottom of a trading range. There's a tail below the bar. Traders were buying into the close. And if the bulls get a second signal, if we get a bull bar on 7, maybe we fall below 6, trap the bears and reverse up, more bears will exit their shorts and more bulls will buy. And then 7, we had an outside bull bar. Closing on its high, 2 legs up, 5, pull back, 7, but we're not at the top of the range. So we may continue higher. This trapped bears below 6, so we have trapped traders below 7, strong enough for a second leg. Bad follow through on 8, so buy climax, pull back, buy climax, pause, maybe one more push up, but the upside's probably limited. But like I said, at this point, trading range open, and that's what we're getting. We went up, we went down, we're going up. Think about yesterday's high, yesterday's low. Where is it more likely that we're going? It obviously looks like we're going to test yesterday's high before yesterday's low at this point. And so that's a magnet. If bears know that we may test this high, they'd rather not sell down here. They'd rather wait. That's what leads to vacuum tests. It may be just as much strong bears stepping aside as it is strong bulls buying. And then 9, we had another vacuum, so a third push. 1, 2, 3. But again, we're getting so close to yesterday's high, we may just get there before traders look to sell. 9's a strong bar, but it is parabolic, and it's more clear. I mean, it's fairly clear here that it's a parabolic wedge. On a smaller time frame, though, you would see a lot more bars. So for 9, probably going at least a little higher, but probably sellers above yesterday's high. 10, we pulled back. It's an inside bear bar. After 3, pushes up. Reasonable for bulls to exit below 10. But we have a couple of open gaps at this point. The open of 6 and the close of 8 do not overlap. And for now, the open of 8 and the close of 10 do not overlap. So we have open gaps, trap traders below. 7 through 9, even 10 is a micro channel, increases the odds that there are buyers below for a second leg up. And then disappointing entry bar for the bears on 11. Even this 1, 2, 3 pushes up could just be one leg on a higher time frame. So we may get a minor reversal. Maybe we test around the bar 9 low and then get a second leg up. But overall, I think we're fairly high in an overall trading range. 12 going sideways, high 1 above 12. Traders might sell a distance above 12. We may not necessarily get to the high here. We may test down to the bottom of the range again. But for now, the bears are not doing enough. They have an inside bar with bad follow through. 13, better for the bears. It's a bear breakout. However, now it's 2 legs down. So 1, pause, 2. It's also an expanding triangle. So we've had several pushes down, several pushes up. The range is expanding. So the bears, if this is an expanding triangle, the bear target is this bear channel line all the way down here. But look at the momentum for the bears. Climax, sideways, climax. Traders are waiting to see what the follow-through looks like. We might be around a 50% pullback, a little bit deeper. It's a common pullback level in trading ranges. Remember I said, just like bar 75, breakouts get deep pullbacks before second legs. So bar 5 through 9, strong enough bull breakout, more clear enough 15-minute chart. It's strong enough that it will probably get a second leg, but that second leg could be delayed after a deep pullback. You can see we're testing the high of bar 6. Traders who sold above 6 got trapped on 7, maybe had a brief opportunity to exit at break even on 8. If they missed it, they're even more disappointed with bar 9. Now we have a 2-legged pullback testing that area once again, so this may be support. 14, bad follow through for the bears. So 1, climax, and then sideways, climax, sideways, 2 legs down after a fairly big rally. You're expecting a second leg, implied high 2 above 14, decent reversal bar, probably going higher. Bears may give up here. 15, we broke out above 14 and then pulled back. 15 is a bad low 1. We're in the middle of a tight trading range. And then consecutive doji bars, probably going more sideways to up here. Buyers below 15. 16, we rallied. Now we have 3 consecutive bull bars. You can argue 15 is a bear bar, but we do have 3 consecutive bull closes. And we'll probably rally a little higher. The bears hoping we'd get down to the channel line. Not looking good. We have a weak breakout. It is a micro channel, but 2 legs, and then we're getting a deep pullback. And then we're going higher on 17. Probably going to test yesterday's high. But again, probably sellers above. This would be at least a second leg here. 1, 2, if not 1, 2, 3. And then 18, you can see we tested just above yesterday's high and then found sellers above. Strong enough rally. It's a 4 or 5 bar micro channel for the bulls. However, it's a nested second leg. So again, we rallied up to 9, pulled back, rallied up to 18. And then in here, we rallied on 15, pulled back, rallied up to 18. That's a second leg. Maybe we'll go a little higher. This isn't a good sell setup, even though it's a double top. It's a higher high, which reduces the probability for the bears. It'd be better if it was a lower high. You have no bear closes in 5 bars, and it's a micro channel, so probably buyers below, going a little higher. 19, a shaved bull bar, breaking out above yesterday's high. The bulls still need to see follow through. And then 20, bad follow through. 20, not a high probability sell. However, at this point, we do have a nested 3 pushes up. So maybe 1, 2, 3, and then again in here, 15, 18, and 20. So traders on different time frames are seeing 3 legs up, and that increases the probability that bulls will take profits, bears will start selling. We're also high in a trading range. Look at the context. Is the market trending, or is it in a trading range? It's clearly in a trading range. It's going sideways with legs up and down. Now, are we high in the range, or are we low in the range? Well, we're probably high in the range, considering this is the range we're talking about. And so in general, you want to buy low and sell high. So 20 is not the worst swing trade in the world, especially if you can use a wide stop and scale in higher. But right now it's not high probability because we have a 5 or 6 bar micro channel. The signal bar is a doji. Bears might rather wait for a second entry, wait for a bear breakout, higher probability, wait for more information, but some bears will take the sell, and it's reasonable for bulls to exit below 20. The bulls need less of a reason to exit longs than the bears need reasons to enter a short. So a weak sell setup like here, when the context actually is fairly good, nested wedge, high in a trading range, bulls can certainly exit below 20. Bears can sell, but like I said, it's not high probability. 21, a small bear bar. Not a very strong entry bar for the bears, but it is a bear bar. And now 21 is a bad high 1. Bad context, high in a trading range, and consecutive bear bars increases the chances there are sellers above 21. We're also failing at yesterday's high a couple of times. 18 tried and failed. 19 tried and failed. 21 a high 1 in a resistance area. Sideways on 22 is an inside bar. The market is contracting. Going sideways, it's breakout mode. And inside bars can be decent signal bars when the context is good. If you're expecting a reversal or a trend resumption. So in this case, we're actually expecting a reversal down. We've had maybe 2, maybe 3 legs up in a trading range. And then disappointing follow through for the bulls, failing at yesterday's high, and then an inside bar. So some bears will sell below 22. And there's probably sellers above 22 as well. 23, we had another bear bar, but it closed above its midpoint. But now we have a 4 bar micro channel for the bears. 23 is a high 1 with, again, bad context and might be getting a little bit of an endless pullback here. Bulls who bought the close of 19 have not had a chance to exit, and they may start to feel desperate. And then a give up bar, 24, outside down, testing yesterday's high once again, and then closing on its low. So we have a bear breakout of a bull flag. Rally, pullback, expectation is a bull breakout, but instead we had a bear breakout. It crossed the moving average. The bar is strong, probably going at least a little bit lower. So I said over here, this was a low probability sell. Better to wait for more information, maybe a second entry like below 22, or you get the bear breakout 24. Now the probability is higher, but now your stop is further, and that's the trade-off. If you sell here, you have better risk reward, your risk is smaller, but the trade-off is lower probability. You sell here, your probability is higher that you're going to get a second leg down and test lower. Now your stop is further away. There's always a trade-off. And then 25, we had a reversal. So for the bulls, we had that micro channel. It was more likely this was minor, but now we have a trend line break. We pulled back 50%. So that's certainly a trend line break, which what I'm talking about is this trend line. So bull trend line, it's broken. Probably get a retest of the highs, and the bears will look for a major reversal. Depending on the strength of the retest, 25 is a good bar, but you know that there are disappointed bulls above who just gave up on 24, so probably sellers above. And then an inside bar, 26, bad stop order signal bar, probably sellers above, probably going lower. The bear breakout will probably get a second leg. 27, micro double bottom with 25, but tight trading range, high in the overall range. We may come back down and test the lows of the range. 28, a bull entry bar, good for the bulls, but not ideal. It's a fairly small bar. We're still high in the trading range. The bull's hoping we get a second leg, 1, pullback, 2. But this was a pretty prolonged pullback and it broke a trend line. So again, probably disappointed bulls above. And then 29, a doji. So we rallied, and then you could say we rallied, pulled back, rallied, pulled back, rallied. Maybe it's 3 pushes on a smaller time frame. Sellers above. Yesterday's high has been resistance today. And then 30, we had a big bear bar. The danger with bar 30 here is that it could be a second leg trap. So from 20 to 24 is leg 1, 2-legged pullback, and then 30, leg 2, testing in the middle of a trading range. Minimum follow through 31, it's an inside bar, probably sellers above. A couple of different ways you can look at bar 31. First of all, the expectation after a big trend bar, especially in a trading range, is 1 to 3 bars sideways. You have bears who sold above, looking to take profits. They'll see this bar as a gift. And then you'll see bulls, they see 2 legs down after a rally, then they may be buying low in a range, maybe retesting the 14 signal bar. And so we went sideways on 31, but there's a couple of ways to look at it. You can say it's disappointing follow through for the bears, or you could also say it's a weak reversal attempt for the bulls. Is 31 going to reverse the market all the way up here? If this was occurring lower in the range, then maybe. But I think for now, the bears got minimum follow through, and bulls would rather buy lower. 32, another bear bar, so spike, and then we're starting to channel down a couple of overlapping bear bars. Sellers above, maybe buyers below for scalps, bears taking profits, but we have targets below. $33 continuing lower, but again, it's a spike and channel. So spike and channel, we may test the 31 high, but probably resistance there. 34, more sideways to down. So if you're a bear and you sold the close of 30, and this is your follow through, how are you feeling now? This seems pretty disappointing. We're still not below this higher low, this swing point, the bar 14 low. You have a spike in channel, more likely we'll come back and test the 31 high before falling for a measured move. Because this is a spike in channel on a smaller time frame, and channels evolve into trading ranges, it's less likely we get the bear breakout of the channel line, which would be something like this, and a bear breakout, 25% chance. More likely we come up and test the 31 high. Outside down 35. One of the best looking bars in this entire channel. So this might be climactic, it might be acceleration at the end of a channel and maybe a late leg. It's probably 3 legs down on a smaller time frame. being an outside bar also reduces the probability for breakouts, probably buyers below. And then 36, a bull bar, probably going at least a little higher, test the moving average, test the 31 high. And now we have a rally, two-legged pullback. It's a deep pullback, but this rally still hasn't had a second leg, and it probably will get a second leg. And 36 could be the start of that second leg. It's a big high 2, high 1, high 2. Another bull bar, 37. So now we have a bad low 1 short below 37. So traders are probably not willing to sell below 37. Consecutive bull bars. At a minimum, we'll probably test the 29 low. It was a bad signal bar, and gaps close in trading ranges. And then 38, another bull bar. So this is a fairly good bull breakout. There's consecutive bull bars. They're uniform in size. Micro gap. They're closing near their highs. There's probably going to be a second leg and buyers below. 39 sideways. It's an inside bar. But this inside bar could be a flag. Here's a small bull trend, maybe a 1 bar trading range, a flag, and then an upside breakout. And then we went outside up 40. So we'll probably go higher, nothing for the bears to sell. They had 2 legs down, and then through 36 to 40, not much selling pressure at all. Bear bar 41, but probably minor reversal. Small bar, it's also completely above the moving average, and this is tight enough that there are probably buyers below for a second leg up. 42 outside up, bull bar closing on its high, probably going a little higher. Bears rather not sell above a bull bar closing on its high, rather sell at resistance like yesterday's high. So 43 going higher, weak signal bar for selling below, probably go at least a little bit higher. And then 44, another bull bar. It's a spike in channel the other way. So here's a spike in channel down. Here's a spike in channel up. So we saw what happened at yesterday's high earlier on bar 20. We sold off for a couple of legs. So we may sell off or at least bounce here and have a minor reversal. But look at the approach to yesterday's high here versus here. Remember I said over here, there's a nested 3 legs up, so a couple of ways to look at it, 3 legs. Also, a big second leg with this, 1, 2. But look at this, this is fairly tight, and it might take something more significant to reverse this. 45, a bull breakout. Breaking out far above yesterday's high, good for the bulls, probably going at least a little bit higher. It might be a measuring gap. However, my concern at this point is a couple of things. It's the first breakout above the prior high of the day, so the bulls still need follow through. And then if it is a measuring gap, that's actually not that unreasonable. We could easily get to this price and then go more sideways. The concern I have is that this is probably not going to lead to a bull trend because of all the trading range price action in here. Here's bar 1, so we went sideways for pretty much half the day, and then the odds of getting a late breakout and bull trend are pretty low. We may reach a measured move target, but then reverse back down. Good follow through for the bulls, so probably going a little bit higher. Maybe a measured move of the breakout and follow through, 45, 46. And then a small bar on 47, but likely a minor reversal. Bulls will buy the close of that bar, betting it's a bad short. And then 48, you can see we rallied. But let's think about bar 48. There's a couple of things to talk about with it. For one, it's the biggest bar in this rally. It's 11 points. The next biggest bar was 9.25 points. So now we have the biggest bar occurring late in a rally in an overall trading range day. We're also testing the measuring gap, measured move. So 48 might be exhaustion. It might be an exhaustive buy climax. So it might be more likely we test the low of 48 than go for a measured move, or test the low of 48 before we go for a measured move. So what bears might do. There's also one more thing I wanted to say. What leg is bar 48? Could be leg 3, 40, 46, and 48. So it might be a late leg, might be late in a rally, biggest bar, possible exhaustive buy climax. Bulls will take profits on the bar, seeing it as a gift. Bears can sell with a wide stop, scale in higher, betting that we will not go for the measured move and will actually come back and test the low of 48. 49, bad follow through for the Bulls. Disappointing. Bulls, it looks like they took profits on the close compared to over here. Decent bull bar, and then there was more buying. So that's a good follow through. But over here, that's bad follow through. And then more bad follow through going sideways. It's a triangle on a smaller time frame. The range is contracting. And it's breakout mode. Possible final flag. Maybe we get a brief bull breakout and then a reversal. And then instead of 51, we're getting a bear breakout. At this point, probably going to test the low of 48 at a minimum. As strong as this rally was, it's like I said, over here, we've had a trading range all day. So unlikely we convert into a strong bull trend. More likely we'll come back down and test, probably come back and test the high of yesterday and then maybe the bar 20 high. So maybe we have a bull trading range day, trading range, bull breakout, and then an upper trading range. So lower trading range, bull breakout, and then upper trading range. Strong enough breakout on 51, probably go at least a little lower, may pull back first, but strong enough for a second leg. 52, inside bar, or almost an inside bar. 4 bar micro channel, it's a low one short after an exhaustive buy climax, reasonable to sell. At 53, another bear breakout, this time testing the moving average, and after this rally we may bounce. There might be buyers below. We're testing the high of bar 20, the expectation, probably start to go sideways around here. And then a doji on 54, so a sell climax, pause, sell climax, pause. Maybe one more, but we'll probably start to go sideways fairly soon. Outside bar 55, buyers below, sellers above. Inside bar 56, that's an IOI pattern. 54 is inside 55, and 56 is inside 55. So IOI, that's breakout mode. The problem here is we are expecting a second leg down, so bear breakout, there's probably sellers above, even if we do bounce here. And then 57, trader sold to close, maybe went above 57, rallied a tick above 56, and then sold off. So now we have 2 legs down, but this is all fairly tight. It's a tight bear channel, so probably have to go more sideways before there's any reversal. Inside bull reversal bar closing on its high, 58, but it's a doji. It's a second entry long. There was a buy above 56 and then a buy above 58. But like I said, tight bear channel, probably have to go more sideways before we rally. And then maybe a third push. So 1, 2, 3, probably buyers below 59. And then 60, a bull bar. Going very sideways here for 3 or 4 bars. Might be a final flag. Tight bear channel, sideways. Breakouts below likely to fail, and we'll probably get a retest of 55. And why 55? Because of the market cycle. You think about the market cycle. Let me see. Give me 1 second. I have a slide that I made on the market cycle. And you can see, so the market cycle, there are 3 phases: the breakout phase, the channel phase, and the trading range phase. So in this example, we have a 3 bar, maybe 3 or 4 bar bull breakout, and then a pullback on bar 26. That's the beginning of the channel phase, and you can see the market channeled up. So we have a spike in channel bull trend. And like I said earlier, the expectation after a channel is not an upside breakout. Most bull channels have bear breakouts, and you end up getting a trading range and a test of the start of the channel, the bar 26 low, maybe the bar 25 low, the bad stop order, and you can see that's what happened over here. So here's the market cycle all together: spike, channel, trading range. So that's what I'm saying over here. Bear spike, we pulled back on 55. We're channeling down for 2 or 3 legs. Now we have a high 2, maybe a high 3 above 60. And this rally is stronger and bigger than this sell-off. The sell-off might actually be a 50% pullback. So we're around 50%. Like I said, this is a fairly tight bear channel. I think it's low probability that 60 is a signal bar that leads to a huge rally and we test the high of the day. But I do think we'll test the high of 55 before we fall for a measured move the same distance down. So for example, down to here. So maybe a trader buys here, stop below, and a target here. Outside down, 61, but it might be a late leg, 1, 2, 3. Probably buyers below. Remember, this is a bear channel, so the expectation, what happens in bear channels? Bears take profits below bars, below prior swing points, like the 57 low. Bulls can start to buy, at least for scalps. And then the market cycle, breakout, pullback, channel, expectation. This evolves into a trading range. This looks like a bear leg in a trading range, more than a bear leg in a bear trend, especially with the context before. Outside bull bar 62, probably going to go higher. Bears can exit above 62, but again, like I said, tight bear channel expectation is more sideways to up than just straight up. 63 consecutive bull bars, and you can see we're bouncing around yesterday's high. 63 becomes a low 1 signal, but it's weak, probably buyers below. 64 rallying, so this might be leg 1 from 62 to 64, and then a weak sell below 64, probably buyers below. And then a deep pullback on 65. So we rallied, had a deep pullback, but think about the bears who sold even below 61. They got trapped on that outside bar, and the market continued to rally. So in this retest, those bears, if they're fortunate enough to get relieved, which we didn't quite get there, there's probably support in this area. And then 66, you can see, came closer to testing that line and then reversed up. So now we have a double bottom, 62, 66, still a tight channel, and we only have a sideways trendline break. So still, the expectation here is more sideways to up than just straight up. But I do think we'll test the 55 high. Sideways on 67. But for the bears, if you're selling below 67, you're selling low in this tight trading range. Probably better to buy below 67. And then 68, we didn't get below. Traders bought the close. We're rallying. So maybe it's leg 1 up to 64, pullback, leg 2, which might subdivide into 2 or 3 legs, 66, pause, 68, maybe another pause, and then we rally a little higher. 69 going a little bit higher, still a weak signal bar for the bears, but the context is getting better. We're getting closer to resistance. It's a nested low 2, low 1 below 64, low 2 below 69, and it's 2 legs up here. So not the worst sell. But again, the signal bar isn't great, and we're close enough to the 55 high that we'll probably get there. 70, a little bit of a buy vacuum. We had a bull trend bar, a pause, and then another trend bar testing resistance. So 70 might be more of a sell to close bar. Also from the bear perspective, look at that 50% pullback right at the 55 high. So a couple of reasons to expect resistance in this area. So again, 70 might be more of a solid close bar. You can also view it as a wedge bear flag. 1, 2, 3. So we might get a couple of legs sideways to down at this point. Big bear bar 71. Strong enough breakout for a second leg, but it's minor. This is all minor reversals. It's trading range price action, and it's fairly tight through here. So even though we have a good enough bear breakout for a second leg, we could easily get a deep pullback, at least testing the bad signal bar, the bar 70 low. 72, deep pullback, but probably sellers above. If you're a bull and you bought 70, that's your entry bar. You'll use any rally you can get to exit. So bear breakout, deep pullback, but probably sellers above in a second leg. 73, rallying a little higher, but you can see above this swing point, sellers above and into the close. And then traders might see this as a wedge, 1, 2, 3. And then outside down 74, a better signal bar for the bears because now we have a bear body. Overall, this looks like a tight trading range. So selling with stop orders not ideal. Better to sell above bars with limit orders and be willing to scale in. The tricky part with that is this could be the top of the trading range. And so if you sell here and then you get a bull breakout, what do? Do you hold the short? Do you get stopped out at the top of the range, and then the market, you face the risk that the market reverses back down? So it can be tricky. 74 might be a bar that bulls can exit below. We've had maybe 3 legs up in this overall tight trading range, and we may get a couple of legs down. Remember, 73 was strong enough for a second leg, and we may be getting that here. 75, entry bar for the bears, not very strong, but also not very good for the bulls, probably sellers above. Inside bar, 76, high in a trading range, probably more sellers above. And then outside down, 77, it's possibly a second leg trap. A couple of ways to look at it, 74, 75, leg 1, pullback, and then leg 2. Testing yesterday's high, maybe 71 is leg 1, 2-legged pullback, leg 2, 77. But either way, in the middle of a trading range, probably going to go more sideways here. 78, outside up, obviously lots of overlap and lots of trading range price action through here very late in the day, probably going to continue sideways and not really worth doing much of anything. Inside bar 79, probably sellers above, buyers below. Sideways 80, same thing, probably sellers above and buyers below. And then another inside bar, so that's an I pattern. It's the same as an I pattern. It's probably a triangle on a lower time frame chart. Just means the market's in breakout mode. However, when the market is already in a tight trading range, it's kind of meaningless. We already know the market's in a tight trading range. These I patterns they can be good signals when you're expecting trend resumption or trend reversal. But when you're in the middle of a tight trading range, there's nothing to reverse. It's probably going to go more sideways. We're always in today. It's always tough on trading range days because it falls or it flips between always in long and always in short so quickly. And by the time you decide it's always in long, it's too late. It's time to sell. You're at the top of the range, and vice versa for the bears. But coming into the day, 2 legs down. Once you get bar 5, it's probably always in long for a couple of legs up. 10 might have been always in short briefly, but then you got 2 legs down, disappointing follow through, so we can reverse back to always in long, maybe by bar 16. And then look at this. It's a decent looking rally, but it's a parabolic wedge, high in a trading range. Looks like a decent rally and always in long, but because it's a trading range, you kind of treat it in the opposite way. So, as always, I always say this, always in is better for trends and swing. You can use it for more broad trading ranges. When the trading range is fairly tight, when you get a decent looking rally and it looks like it's always in long, the reality is it's probably the exact opposite and it's time to look to sell. So it's always better it's reasonable to think buy low, sell high, and scalp when the market's in trading range. We get a couple of legs down. It might be always in long again. Bear breakup, a possible second leg trap. bad follow through, and then we had the spike in channel, disappointing for the bears. So lots of time control for the bears, but look to the left, we had a rally, deep pullback, might be always in long down here. And then just like over here, decent looking rally, but time to sell. Same thing here, decent looking rally, but 3 legs up in a trading range day. So probably always in short up here. Spike in channel, start of the channel over here, so we might be in a trading range down here. Might be always in long around here, but very tight range. For me, I prefer to think about buy low, sell high. For stop orders today, I thought you could buy above bar 5. You could sell below bar 10, buy above 16, expecting a test of yesterday's high. 20 you could sell below. It's aggressive, maybe better to wait for a second entry like the inside bar 22 or even 24. And then through here, 36 I thought was reasonable. 2 legs down, deep pullback after this rally, spike in channel. Minimum probably going to test the start of the channel, which we did on the very next bar. And then 3 bar micro channel crossing the moving average. You could buy above 38. Again, here probably always in long. You could buy above 42, 43, 44, all the way up. However, it can be hard to do when you've had so much trading range price action and you're testing a resistance area again. And then a triangle on 50, possible final flag. Some traders will take the sell. Others will wait for a higher probability. You get the bear breakout and follow through, sell below 52. I thought 62 was a reasonable buy and 66 as well. But through here, really not ideal for stop orders. Even if you are buying above 62, that's your entry bar. And then even more sideways on 64. Really disappointing and not ideal. So more of a limit order market, really all day, but especially in here, it's a very tight trading range. Most traders are better off not even trading through here. It's much easier to make money when the range is bigger. Limit order trades today, I thought buyers below 1, sellers above 1. Buyers below 74, but we didn't quite get there. And then you could say bull breakout 7, buyers at the 6 high. Maybe you get filled on bar 8. And then 3 pushes up, inside bear breakout bar on 10. Some traders will sell the 50% pullback of bar 10 rather than sell the close of the bar or sell below the bar. They'll sell a pullback, and you can see here's 50%. 11 rallied around that area and then sold off. Micro channel, but bad context, so really not ideal to buy below 20. Sellers above 21, 22, but they didn't trigger until 23, and then we got that give up bar. Sellers above here. $27 was a micro double bottom, but it's a trading range signal bar and a pretty tight bear channel, high in a trading range, reasonable to sell above. And then the spike in channel, traders will start buying below these dojis down here. Strong enough breakout for a second leg, buyers below the first pullback, below 39. 41, also a bad reversal, probably a minor reversal. Traders will buy below by the close of the bar. All the way up, same with 47, but then you get here, and this looks like more of a profit-taking area for the bulls. And then we got this bear breakout, 54, a weak high 1, sellers above for at least a second leg. Spike in channel, traders start buying below bars down here, and then all through here, very tight trading range. If you sell above a bar and scale in, or buy below a bar and scale in, you're probably going to make money. And then where do we go Monday? Like I said, we might have to test the moving average, but I do think any reversal attempt the bulls get here will be minor. This was very steep and strong for the bears. It'll probably get a second leg down. The bulls have to go more sideways before we just rally and test the highs. Maybe that's the bear trend line. I think it's unlikely we just rally straight up to here, but even if we do, I think more likely we'll stop at these breakout points. Here's this strong bear breakout points to the left, and you can see it's right around the moving average as well. So maybe we rally on Monday, but then find sellers around maybe the big round number, 5,400, the daily moving average, breakout points, and then sell off. This was a bad low too, signal bar today, so probably buyers below today. But overall trading range and the bottom of the range could be way down here. So as far as buying directly below this bar might not be ideal, because if this is a trading range, this is high in the range, this is low in the range, not ideal to buy high in the range. As always, please feel free to leave questions in the comments and include timestamps for any questions specific to this video. And I hope everybody has a good rest of their night. Thanks for watching.